This is Nightly Business Report with Sue Herrera and Bill Griffin.
Solid gains. A tariff threat has dropped. Companies are doing deals, and that helps the Dow reclaim 26,000.
Mega deal. United Technologies and Raytheon are merging to create an aerospace powerhouse that the companies say will redefine the defense industry.
Great tax debate. Billionaire investors say it's okay to raise the capital gains tax rate, but that may not be what's best for individual investors. Those stories and much more tonight on Nightly Business Report for Monday, June the 10th.
Good evening, everyone, and welcome. Investors started the week with some welcome news. 2 major mergers were announced, and a deal was reached over the weekend that averted tariffs on all imports from Mexico. That lifted sentiment on Wall Street, which in turn lifted stocks. The major indexes built on last week's big gains, turning in their longest win streak in more than a year. The Dow Jones Industrial Average rose 78 points to 26,062. The Nasdaq added 81, and the S&P 500 was up 13. Bob Pisani starts us off tonight from the New York Stock Exchange.
Stocks were in rally mode on this Monday, with the Dow rising for a 6th straight day, seeing its longest winning streak since May of last year, although the market ended well off the highs. Trade talk optimism once again sparked the move higher after President Donald Trump said the U.S. and Mexico reached an agreement to suspend tariffs indefinitely. Well, it's no surprise the trade sectors led the market higher. Trade-sensitive groups, semiconductors, retailers, industrials, they all outperformed. Boy, what a roller coaster this has been. Remember the highs in early May? We had historic highs in early May. The S&P dropped 7% in the next 5 weeks or so on China trade wars and then Mexican tariff worries. But it's rallied back in the next week. We're up 6% in a week, knocking right on the door of that old historic high for the S&P 500. That's 2945. We did get through 2900 today, though closed below that. That's the good news. The bad news is stocks aren't cheap anymore. They're pricing in a lot of good news. Remember, we did not have a China deal, even though the market is acting like we do have one. And we have not had great economic numbers out of the U.S. or, in fact, out of Europe recently. So weaker global growth is an issue with or without trade. A number of Dow components did hit new highs today. Visa, Walmart, American Express, and Microsoft. In fact, Microsoft broke the $1 trillion mark today in terms of overall market cap. And aerospace and defense names also rode the rally. Names like Lockheed Martin, L3 Brands got a boost from this morning's announced mega merger between Raytheon and United Technologies. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And yes, as Bob just mentioned, United Tech and Raytheon are joining forces. It's one of the biggest corporate deals of the year so far. And during today's trading session, both stocks moved in opposite directions. As Morgan Brennan reports right now, this merger puts a lot of products and systems under one roof.
It's a move that stunned experts. A merger of equals between Raytheon and United Technologies.
What we wind up with is a great company that is about 50% domestic, 50% international, 50% defense, 50% commercial. So a very stable, resilient company moving forward, and it's all built on this great technology base.
The all-stock deal is expected to close next year as United Technologies spins off its Otis Elevator and Carrier Building Systems segments. It would combine one of the world's largest defense contractors with one of the top aerospace suppliers to create Raytheon Technologies, valued at more than $100 billion and second only to Boeing in sales. This would bring missiles like the Tomahawk and missile defense programs like the Patriot system together with airplane avionics and jet engines made not only for Boeing and Airbus, but for the F-35 Joint Strike Fighter jets as well. Raytheon Technologies could be positioned to benefit from more defense spending and more commercial orders, while greater scale could also mean the ability to weather any future slowdowns more smoothly.
On the commercial aero side, we expect growth in this kind of 6-7% annually for the next 5 years. Tom, with everything that he's won and with the modernization focus of the DoD, he's probably looking at about 5 or 6% growth. So this is not about one company growing and the other not.
They expect $1 billion in cost synergies by year 4, but really, it's all about the technology. 38,000 patents, $8 billion in research and development, and more than 60,000 engineers. Even though their products don't overlap, the underlying technologies, be it AI and analytics or engineering techniques, could be applied to different production lines across commercial and defense. Still, the news was greeted by President Trump with, at least initially, some skepticism.
When I hear United and I hear Raytheon, which is another incredible company, the missile systems they make are incredible. When I hear them merging, does that take away more competition? It becomes one big, fat, beautiful company.
Raytheon and United Tech say they're complementary, not competitive. They say they'll create more U.S. jobs, and they promise to reduce costs to the government, since they'll be able to bid aggressively on future defense contracts. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
But that wasn't the only deal today. Salesforce is buying Tableau software for about $16 billion, making this one of the largest software acquisitions ever. As typically happens, the company being acquired rose sharply, while the acquirer fell. Josh Lipton dives into the details.
Groundbreaking. That's how analysts are describing Salesforce's decision to buy Tableau software. It's one of the largest software acquisitions ever. Analysts say the deal is transformative because it means Salesforce CEO Mark Benioff can offer his business customers something they desperately want: more ways to gather, order, and analyze the data they collect. That's what Tableau does. It has more than 86,000 customers, including Verizon and Netflix.
What an amazing transaction for the Tableau shareholder. I mean, they were about to be in a business where their biggest competitors were going to be Amazon and Google, and all of a sudden they get bought out at a 50% premium. I mean, we're breaking out the champagne on behalf of the Tableau shareholder because that was a great outcome.
Cloud companies from Amazon to Google all understand that this is a hot market to capitalize on, and they're working to innovate or acquire their way into advanced analytics. It's why Google just last week bought a data analytics company called Looker for nearly $3 billion. Analysts say this deal is a shot across the bow at Microsoft, extending the rivalry between Salesforce and Microsoft from sales tracking software to the analytics market. But for some, this deal also sparked concern that Benioff knows he can no longer grow his company as fast independently, and that he will now have to go out and pay for that growth. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Now that tariffs on Mexican imports have been averted, at least for now, attention turns back to China. And a new report out today from that country showed a decline in Chinese imports, perhaps an indication that the trade war is reducing demand there. And the icy relationship between the U.S. and China was punctuated over the weekend when Treasury Secretary Mnuchin defended the use of tariffs and said that there could be more coming. Eunice Yoon is in Beijing for us tonight.
Chinese export data for May beat expectations. It appears that manufacturers front-loaded shipments or rushed orders after President Trump threatened to slap more tariffs on $300 billion worth of goods. Exports jumped 1%, blowing past consensus of a fall of 3.8%. Imports suggested lackluster domestic demand. The trade surplus with the U.S. widened to a 4-month high to $27 billion. Most analysts believe weak global growth in the trade war will hurt the chances of a recovery in the second half and lead to more stimulus. Separately, China responded to Mnuchin's assertion that Presidents Trump and Xi would meet at the G20 in June. The foreign ministry refused to confirm the meeting, saying, "We have noticed the United States has repeatedly expressed its expectation. If there is concrete news on this, China will release it in a timely manner." China is likely assessing the risks of having President Xi Jinping meet with President Trump. The Chinese won't want President Xi to be publicly humiliated. At the same time, they'll want to appear like the consistent partner in the U.S.-China relationship, which suggests that they would want to have the meeting. The bottom line, though, is that from the Chinese perspective, a Trump-Xi meeting at the G20 is not a done deal. For Nightly Business Report, I'm Eunice Yoon in Beijing.
So what does all of this mean for the Fed and the odds of a rate cut? Steve Leisman has that part of the story.
Despite a weekend deal with Mexico to avoid tariffs, markets are still betting on a series of interest rate cuts from the Federal Reserve this year. The chance of a rate cut is priced in futures market running around 80%. So what would it take for the Fed to lower rates? The Fed meets next week and is expected to stay on hold, but perhaps signal possible cuts coming in July. A cut might come if Presidents Trump and Xi either don't meet in Japan later this month at the G20 gathering, or if they meet and can't strike a deal. In that case, the president said in a CNBC interview today that additional tariffs could be levied on Chinese goods. Add to that another underwhelming jobs report and a weak second quarter growth report, and they all could seal the deal for a Fed rate cut. Some Fed watchers expect a mini easing cycle by the Fed, consisting of 2 or 3 rate cuts.
What does it do? Well, obviously, it supports asset prices and credit conditions. It softens the dollar a little bit. It would help sectors like housing that are beginning to benefit from lower 10-year yields. Is it totally transformative? No. Does it help lean against this extreme uncertainty from trade? Yeah, it does.
And there are those who say the Fed may decide to hold the line. New York Fed President John Williams last week said he knows what markets are pricing in for the Fed, but he declined to endorse it.
The bottom line is that constantly we're hit by shocks, and the question is assessing the magnitude of these shocks is critical, and we just don't really know at this point if it's required to have deep cuts in rates as the market is pricing at the moment.
So there is some risk the Fed doesn't deliver, but most economists say another round of tariffs or even tariff threats from the Trump administration would likely force the Fed to cut rates in response. For Nightly Business Report, I'm Steve Leisman.
And from interest rate cuts to raising the capital gains tax. Just last week, billionaire hedge fund manager Stanley Druckenmiller said that he would not have a problem with a higher tax rate on capital gains. But what about individual investors? How would this affect them if it were to happen? Joining us right now with his assessment, Ben Phillips is founder and chief investment officer of Event Shares. Ben, good to see you. Thanks for joining us tonight.
Thanks, Bill.
You know, among proponents, one of the arguments in favor of raising the cap gains tax is that many wage earners already pay a higher tax than capital gains tax rates. So raising the cap gains rate would just level the playing field. What do you say?
Well, you know, we've looked at past examples in 81, 97, and 2003 when you saw the tax gains rate actually cut and you saw an increase in tax revenue. So for the individual, we actually think that higher cap gains taxes means that they're going to be less willing to invest in stocks. It reduces potential future growth as entrepreneurs are less willing to invest. And so we think that just means lower stock market returns and lower income for retirees who are trying to monetize their stock portfolios.
Yeah, I was going to say, you make the point that basically for retirees who may still have significant exposure to the stock market, this actually cuts back on their ability to spend quite considerably.
That's right. It's kind of a double whammy, right? So you have first the lower equity returns, lower stock market returns, right? So you have that, but then plus you have the hit from the taxes. So if we're talking from going 20% to let's say 35%, that's almost doubling the tax burden on a sale. So you sell a $100,000 stock position instead of, just paying $20,000 to Uncle Sam, you're paying $35,000 to Uncle Sam.
And we often think of just the stock market when we're talking about the capital gains rate, but this applies also to small business owners in many cases, doesn't it?
Absolutely. I think it's about a 50-50 between stock sales and other capital gains, which include business sales. So you think of an entrepreneur who, let's say that, they put in 10 years of sweat equity, so no cash equity, but sweat equity. They sell their business for $1 million, and you're talking about another $150,000 that they can't reinvest in the business if we go from a 20% to a 35% tax rate. So that's substantial. We think that's a drag on growth. Small businesses are the engine for job creation. They're the engine for innovation in the U.S. economy. So if we throw a wrench in that, we think that's bad overall for U.S. growth.
You also say that it's an easy tax to avoid. Just don't sell your shares.
That's right. It is one of the easiest taxes to avoid. So there is some of that encouragement it might encourage a buy and hold investor. So there might be some of that. But again, you have to ask the government, what is the intention of hiking a tax there? What would that mean? And they want to raise revenue, but actually it's counter that. You high cap gains taxes, you see lower tax revenue typically the past 3 times it's happened.
Ben Phillips with Event Shares. Again, thanks for joining us tonight.
Thanks for having me.
Time to take a look at some of today's upgrades and downgrades. Tesla was upgraded to buy from neutral at Roth Capital. The analyst cites the potential for stronger demand from China. The price target is $238. The stock rose 4% to $212.88. Analog Devices was upgraded to buy from sell at Goldman Sachs. The analyst cites an improved growth outlook and exposure to multiple revenue drivers. The price target is $114, and the stock rose more than 5.5% to $106.55.
Still ahead, Amazon issues a new credit card to help consumers build their credit. But is there a catch?
Therapeutics has filed for bankruptcy. The filing comes days after the pharmaceutical company agreed to pay $225 million to settle federal charges over the sales of its opioid drug. Insys is the first drug manufacturer to turn to bankruptcy due to opioid-related legal expenses. As you know, it is a story that we've been following for years, from the first state investigations to doctors who were targeted by the company. And back in 2015, we did a series focused on the issue called Pushing Pain.
Also, as you know, big tech is facing antitrust scrutiny in Washington these days, and that includes Facebook, which has ambitions far beyond its core social media platform. Julia Borston has more for us tonight.
The FTC will be taking a hard look at not just whether the tech giants are too big, but also whether the tech giants are unfairly using their dominance in their core areas to disadvantage competitors.
I think the focus is going to be on Facebook and Google. They both have very dominant positions in niche markets. For Facebook, it's social networking. With Google, importantly, it's advertising technology, or ad tech, which is the piece of technology that publishers use to sell ads online. It's also online search. In those markets, they have a very dominant position.
With Facebook now competing in a wide range of businesses, from video games and esports to job postings and movie ticket sales. One question is whether Facebook is using its dominance in social media to promote, say, its own dating service. The FTC will scrutinize Facebook under the Federal Trade Commission Act, according to one law professor who says it's more flexible law and could recognize new forms of power and abuse, saying the FTC could decide that a dominant platform is a gatekeeper and abusing competitors on the platform would be unfair competition. Google was fined a record $2.7 billion by the EU in 2017 for giving an illegal advantage to its own online shopping service in search results. The FTC investigated Google for this, but didn't fine the company. President Trump, in an interview with CNBC Monday, criticized large EU fines against U.S. big tech, but said the antitrust issue is worth exploring.
I think it's a bad situation, but obviously there is something going on in terms of monopoly.
Experts saying that regulatory scrutiny is likely to be much more about policing these companies' behaviors rather than trying to break them up.
I do believe the agencies are going to look closely at big tech, but I think it's going to be much more drawn out and sort of in the trenches and details than people think. I just don't think we're going to see these sort of sweeping wholesale changes or breakups that some people are talking about.
Now that Facebook enables its users to make phone calls and sell products, it'll have to be careful to show it's not disadvantaging new rivals, including the likes of mobile carriers and eBay. For Nightly Business Report, I'm Julia Borston in Los Angeles.
American Airlines extends flight cancellations of 737 MAX planes past Labor Day, and that's where we begin tonight's market focus. The airline carrier says it's canceling more than 100 daily flights because of the grounding of the 737 MAX planes through September 3rd, later than the previously planned August 19th date. Boeing says it has finished a software patch for the 737 MAX planes, but aviation officials have not signed off yet on those fixes. The plane was grounded in March following an Ethiopian Airlines crash, the second fatal crash in 5 months involving a MAX. Shares of American Airlines dropped a fraction to $30.76. Kraft Heinz says it's completed an internal accounting investigation and changed its financial practices that triggered a regulator probe and steep decline in the food maker's stock price. The company says it is taking actions to strengthen internal controls over financial reporting. Shares rose more than 5% to $30.31.
Private equity firm Apollo Global is buying online digital photo services company Shutterfly. Apollo is going to pay $51 a share in a deal that values Shutterfly at around $2.7 billion. Shutterfly was up more than 2% in the regular session today to $50.25. And Merck is buying biopharmaceutical company Telos Therapeutics. That's a deal valued at around $773 million. The acquisition gives Merck control of a pipeline of cancer, fibrosis, and autoimmune disease treatments. Merck was up a fraction today to $82.48.
Amazon is launching a new credit card for Prime members with no credit history or bad credit. The card will be called Amazon Credit Builder, and it will allow users to build up their credit through a secured card while getting perks like 5% cash back on purchases. What are the pros and the cons? Well, Greg McBride, Chief Financial Analyst at Bankrate, joins us now to talk about that. Greg, nice to have you here.
Thank you, Sue.
You know, it seems as though it's a good idea for those who are quote unquote unbanked, don't have access to credit, but it seems the devil is in the details. One instance is an extremely high interest rate.
Very high, even by retail card standards. The interest rate is over 28%. Retail cards by nature tend to have higher rates to begin with, but even 28 is really at the top end.
I mean, and that's on a secured card. So you deposit money and that becomes your credit line. And yet you're still paying the 28%. The other thing that it strikes me is you can only use the card to buy items on Amazon. That's a new wrinkle.
Yes, and this is a what's called a closed loop card. And so like a lot of retail cards, you can only use it at that particular retailer. So this retail type card, but having a secured card, that's kind of a new wrinkle. And you're right, you make a deposit that's equal to your credit line, anywhere between $100 and $1,000. That really takes away a lot of the risk for the issuer and also for the cardholder. But again, paying 28%. You don't have to keep a balance for too long, and you've more than wiped out any cash back that they're giving you on those purchases.
So it comes down to discipline, does it not, in terms of if you get one of these cards, you need to pay off the balance completely?
Absolutely. I mean, it's a lot like a sharp kitchen knife. In the right hands, it's a very useful tool. In the wrong hands, it can be dangerous. With an interest rate of over 28%, if you're carrying a balance, that's dangerous. If you're trying to establish credit, don't fall for this notion that you have to carry a balance in order to build credit. You don't. You can make small token purchases, pay it off in full every month, build credit very effectively that way, not incur finance charges, and if you're a Prime member, you can get 5% back on those purchases.
But it does highlight the number of people who are either underbanked or unbanked completely. They're taking advantage, they're looking into this opportunity to reach those people who wouldn't otherwise have an opportunity to have a card, right?
Yeah, Bill, I mean, this has been really, I think, the area where a lot of financial institutions and even some non-financial institutions have been trying to tap into this market, the unbanked and the underbanked consumer, viewing that as a potential growth area. But on the other side of that, if you're the consumer, you've got a real incentive to do what you can to pay that bill on time, not run up balances that you can't pay back, and then eventually translate to an unsecured card.
Greg, as always, thank you. Greg McBride with Bankrate. Coming up, Help Wanted, the power of wind and the job skills that are in demand. The number of job openings remained near a record in April, and it exceeded the number of unemployed Americans by the largest margin on record. According to the Labor Department, there were about 7.5 million unfilled jobs, meaning that employers are still having a hard time finding the right workers.
And that is especially true in the wind power industry, which is experiencing record growth right now. Many businesses there are hanging out the Help Wanted sign. And Kate Rogers went to one of those companies in Shenandoah, Pennsylvania.
In 2008, Jason Juricic was at a crossroads after losing his home and landscaping business in Youngstown, Ohio. He decided to pursue a 6-month program for wind turbine technicians.
I was real interested just in the small turbines, just at home, trying to build one myself. I decided that maybe I didn't know enough about it. Maybe I should go to school for it.
That maybe turned into a career for Juricic, who's now a senior lead technician for Avangrid Renewables in Shenandoah, Pennsylvania. With 114,000 full-time jobs supported by wind energy in 2018, from construction to manufacturing, the American Wind Energy Association says workers like Juricic will be in demand for years to come, with projects underway nationwide. Turbine technicians make a median of $50,000 annually. But in the face of a tight labor market, companies are aggressively recruiting across state lines, offering signing bonuses and competitive benefits. With 60 wind facilities and another 5 in development, Avangrid Renewables says talent retention is a top concern.
We've been doing a lot at the local colleges and schools, and even starting in the high school area. because it doesn't require a 4-year degree. It's really a commitment to safety, first and foremost, mechanical aptitude, and problem solvers. And so when you look across our workforce of technicians, they come from all different backgrounds.
Manufacturers do make parts for turbines like these ones domestically, but the supply chain is also global. So tariffs on imported Chinese goods could hinder job growth moving forward.
We would have been hiring more people if it weren't for the current tariffs. And if the tariffs increase as the president is proposing, that will either further reduce our growth or could at some point lead to a decline in the number of jobs in the wind industry.
Political uncertainties aside, technicians like Clayton Karanek say the job is rewarding.
It's like working on a big car. You know, it's satisfying. The pay's good, the benefits are good. You know, kind of makes you feel like you're doing a little bit good for the environment, even if it's just small.
For Nightly Business Report, I'm Kate Rogers in Shenandoah, Pennsylvania.
Here's a look at the final numbers on Wall Street today. The Dow rose 78 points, the Nasdaq added 81, and the S&P 500 was up 13. And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a wonderful evening, everybody. See you tomorrow.